Welcome to another Ask an Investor session. I'm Pravin, the founder of Quidroom, a social platform built for investment experts to efficiently manage their global community of professional investors. So before we kickstart, just as a quick disclaimer, the content shared here is for information purposes only and should not be construed as legal, investment, tax, financial, or other advice. Now, for all investors who are listening into the session and the podcast, if any of your questions are unanswered or to get regular insights on to interact directly with investment experts in the payment tech industry, you can join more than 340 professional investors in the Paytech Investor Club in Quidroom. The invitation link to the club is posted in here and is open to professional investors. So today we have Winston Ma, a published author, a VC, ex-divisional CEO of China Investment Corporation, a professor. I'm not sure what more I can say, but of course, you're one of the leading investment experts. Doctor. Yes, so you are definitely one of the leading investment experts in blockchain and Web3, and that is pretty interesting for me because look, I'm very excited for the launch of your new book on blockchain and Web3 that is coming up, especially because I want to understand your views on how sovereign governments and CBDC is going to shape the conversations around Web3 in the future. But before we get into understanding a little more about what your book is going to uncover, let's take a step back. I'm very curious to know, you come from a very strong institutional background.
Yes.
So what was that pivotal moment when you decided that you want to get more involved in blockchain and Web3 space?
Thank you, Pravin. When you say you come from a very strong institutional background, you almost are saying that you come from a very centralized background, right? So I think it's interesting. I got into the blockchain and crypto assets space because of several reasons, and most of them actually have a very strong China element to it. First was the first time I started to touch on the topic was back in 2016 when I published my book, China's Mobile Economy. Was covering China's mobile internet revolution, right? Everyone gets smartphone, gets cashless pay, mobile payment, etc. So the editor said, hey, maybe you should cover blockchain and crypto with this book. And of course, the editor had no clue that the blockchain and crypto topics are completely different from the mobile internet topic, right? Until today, actually, we can talk a bit later. Until today, the blockchain crypto community still struggle to connect with a much larger mobile internet community for business expansion, right? So that's one. And secondly, was because of the China market. Until last year, right, when China started the serious crackdown on crypto assets and crypto transactions, crypto mining, China used to be the world's largest crypto mining space, the largest crypto mining equipment manufacturer, and the biggest crypto trading place, right? And also you have probably the largest user base for crypto transactions. So China used to be like the #1 crypto space in the world, and I learned a lot, from my contacts in that space. And then thirdly, I look at blockchain and crypto technologies as a new frontier of the US-China tech competition. In my last year's book, right before this year, this new book, Blockchain and Web3, my last year book was the digital war, how China's tech power shapes the future of AI, blockchain, and the cyberspace. Yeah, and for China and the US, who are competing in various tech verticals, blockchain and crypto technologies are the latest frontier of their competition. the most obvious one is relating to the digital currency, right? China is by far the leading country that have tested crypto technology, blockchain technology based CBDC, sovereign digital currency at a mass scale, right? At the same time, US dollar is a global reserve currency right now. And today, you probably saw a Wall Street Journal news, right? That you have a bipartisan senator group that is promoting a new law to accelerate the development of digital dollar by the US Federal Reserve, right? So I follow these topics very closely, for various China-US background reasons. But I would say obviously the most important one is that I'm a tech investor, right? I'm now a VC investor after my time at the CIC. To me, this Web3, Metaverse, decentralized technologies, right, are the new frontier of VC investments, and I'm spending a lot of time for this topic.
See, it's interesting that you brought up about CBDC, because today in the morning, today as well, I was just speaking to one of my friends whose his CEO is working right now with the Australian government for the release of a digital currency there, and they're trying to do a beta release, I would say, this year. So it seems like a lot of governments are taking this up seriously, which brings me to understand the future, right? So are we likely to see more or less involvement of intermediaries in payment transactions? i.e., is it possible to see a world in few years where blockchain handles all transactions independently or via central bank digital coin networks?
Oh, it's a great question. It's almost like the early years of internet, right? People would worry that if different countries adopt different technologies, then you do not have global internet connectivity. And the same is true about smartphone technologies, right? If you don't have a global standard, then I have to change my Apple phone into a Huawei phone, when I fly from New York, where I live, back to China, right? But so far, guys have figured out a global standard, so I do not have to change phones when I travel, right? But at the same time, CBDC, sovereign digital currency, is a new technology, and the different countries are developing their CBDC from a different start, right? Some come from more centralized technology platform, right? Some may test, decentralized technology-based CBDC. So we'll see various different currencies, and they come from various different supporting platforms, right? And right now we are seeing various countries go into this digital currency race. Obviously China has its e-renminbi, right? Had a mass testing last couple of years, including the first cross-border testing with Winter Olympics athletes from 100 countries earlier this year. Right? You also see countries like India, right, started to develop digital rupee, and then UK starting to develop Bitcoin. Recently, Russia is talking about developing digital ruble, so on and so forth. So a lot of countries. So I'm not surprised by your mentioning of Australia, potential testing own digital currency, etc. Right. So lots of countries are developing this, but the key question is, can these currencies be used globally in cross-border context smoothly, right? So that's why SWIFT is now testing cross-border payments across different CBDCs from different countries. I'm on the advisory board for Capgemini, and Capgemini has teamed up with Swift to work on such testing of cross-border payments between different CBDCs. The announcement was made back in May, so we should keep eye on that development because this testing, right, involves two very important aspects. One is can Swift, right, which used to support the traditional currencies, can in the future support cross-border payments among different CBDCs of different countries, right? And secondly, it's also about testing of digital currencies interoperability, right? Can you exchange, making exchanges between different CBDCs of different countries? So this will be a very big testing, for us to see whether we can have a new payment system going forward based on different CBDCs.
No, absolutely, and it does seem like there is a lot of challenges, but there seems to be a lot more opportunity as well coming in, so there seems to be that there is going to be an impact on the traditional players in the banking payment system, right? So the traditional banks, neobanks, super app banks. So what's your opinion? Will one of these likely succeed over the others, or will something else entirely new happen in the coming years?
Well, the payment space is much bigger than the sovereign currencies, right? Because of the emergence of the Web3 discussion. So essentially, we will see a competition among three forces. One, as we covered, right, it is about the sovereign digital currencies, the CBDCs from the central banks of different countries. And the second part is about the cryptocurrencies, right? Starting from Bitcoin to various different tokens today. Many, not only new tokens, but also new chains, right? And all these cryptocurrencies development creates the potential to become global currencies. As we know, right, several countries like El Salvador, etc., right, have adopted Bitcoin as legal tender in their countries. At this moment, only a few countries are testing that, but that's another direction, right? And thirdly, we should not forget about the big tech companies, right? They do not want to leave. They don't want to be left out of this, right? If anything, the super apps want to be even more super, bigger. Covering everything, right? So in the case of Meta, used to be called Facebook, right? They have tested their own digital currency. If you recall, Facebook tested a Libra currency for the Facebook ecosystem for a few years, until recently, they put that project to stop, because of regulatory pressure. But for big techs, those super internet platforms, right? The big tech companies, they have billions of users. So to them, it is only nature to think about some platform native tokens, some platform native call it payment solutions among their billions of users. For example, for Facebook, right? If you already have a social network connecting billions of people across different continents, why don't you create your own currency and your own wallet to handle all the transcontinental financing needs among the billions of people, right? So going forward, we will see this three-way competition for the future of payment. The sovereign currencies of the countries, the tokens of the crypto communities, and the currency and the payment solutions provided by the big tech platforms. I covered this three-way war, in my upcoming new book, right? At this moment, we still don't know who will be the final winner.
So you have covered quite a bit of this also in your book. That is going to be interesting for me to read. But by the way, it's great that you actually brought up Facebook, and because you're building Meta now, because we're going to be talking about Meta. So I regularly hear the terms Metaverse and Web3. They are interchangeably used, and a lot of investors also regard them the same. But I'm sure that is not right. So is there a difference that investors should keep in mind when they are looking into investment opportunities in Metaverse and Web3? Are they missing out on something?
Right. Yeah. No, I think both terms are related to the future of the internet, right? So that's why in many places people use these terms interchangeably, but they have different focuses. The two concepts represent different characteristics of the future of the internet. For the term of metaverse is more relevant to user experience. Right? It is mostly related to users moving into a 3D, interactive, immersive internet experiences, as compared to today. You have a 2D, right, two-dimensional, less interactive experience with the current internet, right? So for that, you can think of companies like Meta, right? Facebook, which has which acquired Oculus a few years ago and has a very big AR/VR unit, right? Or Unity, the gaming engine company that provides a 3D engine, that can be used by gaming as well as by construction, real estate, healthcare industries, right? But for the term Web3, the focus is more on the ownership and the economic interests of the internet, which is expected to be more decentralized, right? So the Web3 concept comes from Web 1 and Web 2 in the past 2 decades, right? Web 1 is just internet at its PC age, right? You watch, you can read it, but as an average person, you cannot do anything with the internet, right? But for Web 2, you have the mobile internet, you have the social network, Facebook, Twitter, etc. So average person like you and me can become internet celebrities for 15 seconds, right? But the difference is, right? For our 15 seconds fame on Twitter, we don't get any payment benefit out of it, right? Maybe we feel satisfied, but we don't get a payment. We don't get a share of the profit. If our participation in Twitter would lead to a user traffic and a cash flow for Twitter, right? So that's why you have the Web3 concept, which is to say that going forward, the users, right, the creative contents, right, will own a piece of the internet, right? Such that the participants can take ownership of the internet, and more importantly, can benefit from such ownership through monetary gains. So the Web3 thing has a lot to do with decentralized ownership and economic participation in the future internet. So for that, right, blockchain becomes very important because it is a decentralized technology, and based on blockchain platforms, you can develop crypto tokens to govern and manage the economic interests of the participants.
See, so we are talking about Web3. So this also brings me to the current status, the status quo. So of course, the usual topics of crypto winter are always talked about. So let's just keep that aside and let's just focus on one aspect which is highly important for the success of Web3 in the future. So yes. Elliptic recently released a report, and according to them, in 2022 alone, hackers have stolen crypto worth of $1.2 billion of investor money, right? And that is from the blockchain bridges. And blockchain bridges are essential for Web3. They are essential for decentralized finance applications to be successful. I mean, Nomad alone in last week, what they lost $200 million. So they were stolen off $200 million. So what's your opinion on how the industry will be able to deal with this risk before it starts affecting investor sentiment and trust?
Totally. You know, essentially what you're saying is that for Web3, there's a huge need for new Web3 infrastructures. You need a lot of new setup in order for Web3 to work out, right? What you just touched on is about crypto security, or broadly we can call it cybersecurity. Now, in the context of Web3, you essentially have all the old issues of Web2 cybersecurity challenges, and plus new issues coming out of the Web3 connectivities, right? So number one, you need to develop lots of crypto security infrastructure. So we have seen a few startups in those areas, right? Like a Certic for smart contracts auditing, or chain analysis, which provides you information about your transaction counterparties, know your transaction, so to speak, right? So you need a lot of Web3 cybersecurity tools to protect this new ecosystem, which is very fragile, right? And then secondly, the Web3 environment needs to solve interoperability issues in order to scale, right? Going back to the example you mentioned, Nomad, you know, it is a blockchain bridge company, right? So they provide bridge among different blockchain platforms. And why you need this bridge? Because you need interoperable transactions among different chains, right? You don't want everything to be locked into one chain, one ecosystem. In order to create a vibrant environment, you need people. You need the technology to support transactions to go across different chains, right? And in this case, this blockchain bridge serves that purpose, but actually it is very vulnerable to cyber attack, right? So this means you need much better bridges going forward. And then thirdly, you know, back to the Web2 issue, right? This data issue. In Web2, we worry about data being captured by big techs like Facebook, right? And then benefit to the tech companies instead of the data owners, right? And now in the metaverse context, whatever the platform is, they can collect even more data of you, right? Because you are being an immersive 3D environment. So they will take the data they can take from you, go far beyond the data they collect in the Web2 environment right now. So you need a lot more data privacy protection infrastructure to come in, right? And so that's why these days people are developing data privacy tools like zero knowledge proof, etc. Right? So in all three areas, you will see a lot of new venture ideas and startups to come.
I'm sure you must have come across quite a bit of these startups because, of course, you also have a VC hat as well that you run. So let me know. I mean, layman people like us who are not that connected into the industry, and you're based out of New York as well. Perfect, please repeat. So what do you see right now in terms of interesting things that are happening that will completely redefine, especially how payment happens through blockchain in the coming years?
Right. I would say, you know, the entertainment area, you know, for example, like gaming, is a very interesting example of an existing industry that is quickly evolving with Web3 applications. Gaming is now a very big media, right? So to put it there. So globally, you have billions of people who are gamers.
Yeah.
Who are gamers, and they play games together, right? One big challenge for the gamers is that whatever in-game assets they have, whatever awards they earn, from a particular game, they cannot take it anywhere else except in that game, right? Frankly, if the gaming company decides to stop supporting that game one day, actually everything in that game will go disappear. So that's why the gaming thing, the gaming sector has become the frontier of crypto and NFT and blockchain applications. You may have heard about the term play to earn gaming, right? P2E, right? So the idea is the gamers' activities in the game can earn tokens. And on top of that, the game will create a token exchange platform so that guys can exchange the token for cash and move elsewhere, right? Now, if you think about the gaming industry's development last couple of years, that's quite important, because if the gaming industry can enjoy tremendous growth without providing any monetary benefit to the gamers, how much more development it will be, right? If guys can play to earn, earn tokens when they play, and more, they can actually trade those in-game assets for value in fiat currency, right, and use elsewhere. So this is a very important case study, and at the same time, it is a great case study because it's not as smooth as the crypto communities hoped. For in some gaming platforms, the gaming companies decided not to allow crypto to be part of the games because they say this will negatively impact the user experience, for the gamers, right? So all these things are still at the very early stage, right? On one hand, you see new business model coming from new business models can be added to existing industry, right? But at the same time, what is the best way to integrate them is still to be found.
Absolutely. Thanks for that. And that was really helpful, Winston. So before we close, there are two questions from investors. So the first one is, do you find any similarities between 90s internet bubble to current turbulence in crypto markets? Is there any trend you're hooked on that could be Amazon's story of crypto world?
Very interesting. I think very similar, because every time you have a new technology come out, there's always a lot of hype, right? Then lots of capital will go there. That's almost like a capitalism 101. If there's promised outsized returns, right, the capital will follow. Then the industry will go through a consolidation, and then only a few big survivors will stay, and then they will become the dominant players, as in the case of Amazon after the dot-com bubble bust, right? Now here, in addition to this tech hype, right, there's also another very important factor contributing to such crypto boom, which is a lack of regulation, right? Last couple of years, there was literally no regulation at all, for the crypto market, whether it's crypto mining or crypto trading or crypto transactions, right? There's no regulations at all. However, these days we see more regulations coming from all aspects, right? From the crypto mining side, for example, New York State has adopted a new law to limit the usage of traditional energy to mine cryptos. The law has not yet become effective, but it was passed by the lawmakers, waiting to be effective. Secondly, for crypto trading, right? This is where the SEC will kick in, and now we see a lot of regulatory actions are developing. For example, inside trading cases against ex-Coinbase employees, and in connection with such inside trading case, which, by the way, really defines, which implies that the tokens in those cases are securities, right, from the SEC side. And in connection with those cases, actually, SEC expressly said a few tokens under those cases are securities, right? So which means going forward, those trading of those tokens and the exchange that support such trading of the tokens will be subject to SEC regulations, right? And then thirdly, you have the transaction side, right? The recent bankruptcy cases of crypto lending companies, right, are creating precedents to define the nature of crypto transactions, on those crypto platforms. So lots of regulations are also developing, which will help accelerate this consolidation of the crypto industry, which had a wild growth last couple of years.
Yeah, absolutely. So the second question you have already answered with the answer for this question. So that is, so we have covered all the investor queries. But for now, from my end, if investors are actively looking to invest in the space, what would you suggest that they should be really looking for? One, and the second thing is, and there's going to be more about your book. What should investors expect to uncover when they read your book?
Okay, yeah. No, we sort of briefly covered that, as I alluded to. Correct. Here, that for Web3 we need a lot of new infrastructures, right? So personally, I would focus more on the future Web3 infrastructures at this moment, instead of trying to chase one particular token or one particular NFT, right? There are several ways to participate in this Web3 market because of the variety and the diversity of crypto tokens started last couple of years, right? Several years ago, it was all about Bitcoin, but now you have a variety and a diversity of tokens. You have DeFi, right? Decentralized finance, which leads to the creation of various financial structured products, and you also have NFT, non-fungible tokens, which leads to digital arts, but also have broad implications, broad use cases in other industries, right? Like entertainment, like sports, like luxury brands, etc. Right? And thirdly, you also have the gaming tokens, right? The gaming is a big industry, and the integration with gaming tokens are creating a lot of new plays out there. But overall, you see the largest deals are related to the underlying infrastructures. So for example, relating to NFT, you have OpenSea, right? OpenSea covers more than 90% of the trading volume on NFTs, and last year there was talk about NFT going IPO, right? Or you think about, speaking of my sovereign wealth fund background, right? Recently, Singapore Sovereign Wealth Fund, GIC, led a 500 million round investment into chain analysis, which provides which provides transactional data for crypto transactions, right? Like, know your transaction and know your transaction. All these are good examples of kind of new Web3 infrastructures. But in terms of VC, right? Back to our initial focus about payment, right? Relating to just like the mobile internet, right? Mobile payment was tremendously important for the mobile internet economy to become active. For the Web3, how to solve Web3 payment, especially across different tokens, and then next level across tokens, CBDCs, and the big tech payments. These are tremendous challenges, right? And we will see a lot of VC deals coming out of that area. And again, right, this will be the infrastructure of the future Web3 economy. So personally, that's what I will focus on. Actually for CloudTree Ventures, we mostly focus on the underlying technologies for the Web3 instead of looking into one particular gaming title or one particular NFT for trading.
Thanks, Winston. That was, I would say, a very apt conclusion to our whole discussion. Well, that's it for now from me. Winston, it was really great to host you today. For all the listeners, Winston has created a community in Quidroom for fellow professional investors interested in blockchain and Web3. Otherwise, he's available through LinkedIn to also get in touch with him. The handle for his community in Quidroom is posted in here so that you can join the conversation. So for today, let's make investments better, one step at a time. For now, we say goodbye.
Thank you, Pravin.
Thank you.